Hello to all traders and welcome to our monthly visit for the NFP payrolls. So this payroll will take us into the long Labor Day weekend today. So if you're planning on having a long weekend, then I hope you enjoy it. Usually when there are bank holidays around this period, especially on a Monday, usually when the NFP is over, we usually get a lot of traders starting their weekends early. So that will be interesting to see as we get into the later European session to see if there's still any market movement after the NFP has concluded. So thank you for joining me today. I just wanted to take you through what we're going to be going through today. So if you'd like to connect with me, first of all, I'm on Twitter and LinkedIn at these links. So feel free to contact me at any time. Okay, so before we begin, I have to read a small disclaimer. So foreign exchange trading and investment in derivatives can be highly speculative and may result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public and only risk capital should be applied. This webinar is provided for information purposes only and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of any commodity, security or investment, nor should it serve as the basis of any investment decision. Orbex Limited does not guarantee the accuracy or completeness of information or analysis supplied. So with that being said, let's just go through the agenda. I'll put it onto the next screen for you. So we're going through a preview of the NFP, obviously. So we'll look into certain pairs to trade, data that makes up the sentiment, and going into today's NFP. So we're going to go through different interest rate differentials on particular economies and the intraday strength on the top currencies. So starting off, the early indications are Donald Trump has shown a lot of confidence recently in the US jobs market over the past month as he continues his election campaign. However, for this particular NFP, he's been a bit quiet. The president does get some sort of indication the night before on the job number. Last month, if I remember correctly, he was bragging that it was going to be a very good report, and it wasn't a bad one. So this one in particular, because there's not been too much talk about it, a lot of economists have said it is a tough one to call. It is going to be very close. So we'll see in approximately 30 minutes. So we have witnessed a couple of one particular record-breaking month as the US recovers from the pandemic. Last month's job reports, it was a little bit down, but it was still a vast improvement as we went into the July jobs report. So that was very, very significant. So as we've seen this month, so if I just go through what we've seen here. So analysts expect a decrease from just over 1.7 million to just under 1.5 million. Now this is quite significant because even if it is a decrease, the numbers that are coming out at the moment, the early indications are that it probably won't be as detrimental to the US dollar as previous NFPs because the number of jobs is not that much different from the forecast to the to what they think it's going to be. So July's data, which was the August release, it beat expectations by 143,000. Again, it wasn't much of a significant number, but it was a number that was carried on into the sentiment of the dollar. So as we go into this one, just to cover a few things that had happened. So this week, jobless claims fell just below the 1 million bracket, which is quite significant because we've been witnessing over the recent weeks that it's been hovering just around or above the 1 million zone. So for it to break through and have a dent, let's say, in the 1 million bracket, it has been quite buoyant, let's say, for the American dollar in the last few days. So we'll be keeping an eye on that. ADP figures as well. This is quite good going into going into the week ahead. We did have a miss on the job numbers. The private companies only added a certain amount of jobs, so this could affect sentiment going into the NFP as well. So ADP figures vastly miss expectations. However, private firms did actually recruit, so there was an indication in this, let's say, a step forward into the jobs market. So as we go into the next slide, just take you through this one as well. So unemployment rate, analysts' expectations are less optimistic at 10.7% from 10.2. So again, it is a little bit less optimistic, but again, it's not so detrimental in the fact that we're going to see something, a percentage that's very, very bad for the US economy. So we'll have to see how that goes. Hourly earnings grew by 0.2% or 7 cents. The previous month was downbeat, falling 1.2% on an expected 1% drop. So again, there is growth in this sector. It is starting to recover. So it'll be very interesting as we go on. We've experienced a strong dollar in the last couple of days as well. People are turning to dollar now as let's say more of a haven than other assets that they could be trading on. So it is a good indication of where the labor market and the job sector is going in America. Wages are expected to rise at 5.8% year on year. So this was above the previous months. So again, wages, this is obviously a good sign as well. And the latest CPI inflation increased to 1%. So again, it is recovering further from May's 4.5-year low. So the economy is looking to keep pushing higher and higher as we get into to the back end of 2020, and we hopefully get past this pandemic struggle that most economies have been suffering from. So we'll have to see how that goes. So let's take a look at the lagging and leading indicators, as those are the ones that can give us a glimpse into how the market is performing. So lagging indicators give us an idea of what the economy did the previous month. They don't necessarily move the market so much, but they can just give us an idea of what's been happening. So we've had ISM, manufacturing and non-manufacturing this week, which again has been given a good indication of how it can be, of what's been going on. We've had the ADP Non-Farm Employment Report, which we just spoke about, consumer confidence at the University of Michigan, very, very important report that comes out of Michigan. It's been going on for roughly about 80 years now, so it does add to sentiment in the market, and it does add to what we can expect going forward as well. So very, very important as well. The leading indicators, so treasury yields and equities, crude oil prices. So as we go on to the next screen, this will probably shape it up a little bit better. So from the previous month, we've had, if we look at all the topics that we cover on a given basis, we can see that there is slightly more pros than cons this week. So this is an indication of, very good understanding that the jobs market or the economy in general is going in a good direction. So ISM non-manufacturing, it's got here that it's just slightly down than the previous and the forecast. So again, it's not very, very detrimental. It is a good indication that it's on the road to recovery, especially with, again, the ISM manufacturing being higher. This was very, very important as we go into the job numbers. Jobless claims that we spoke about as well. As I said, broken through the 1 million barrier. The previous was just over 1 million. I believe before that was 1.1 million, and it was hovering around this area. For a country to have, the size of America, to have 1 million jobless claims per week, it's not a good indication or a good sign of a recovery. It's a sign of a very slow recovery. But now that we've actually punctured through the 1 million barrier, even gone below the 900,000 barrier, then it's a very good indication of next week it'll be very interesting to see if it can keep pushing down past the 800,000 and slowly start settling again before pre-COVID levels. So ADP, non-farm employment, we spoke about as well. We touched upon. That was a little bit down. Well, it was down from the expectations. So again, private sector firms were not as readily to employ as what the estimations were. So we'll have to see going on the next ADP if that's going to be better or not. University of Michigan, consumer sentiment, like I said, very, very important sentiment. A lot of people forget about this or don't really take it as a point of note, but it's been going on for so many years that we have to, especially now as the economy starts getting back on its feet, we have to look at all sentiment, no matter how big or small it can be, just if it's going to affect anything going forward in the market. Consumer confidence and core retail sales were down slightly. Again, this will be a factor should we get a weak job report. So, and as we go at the bottom for the leading indicators, so treasury yields, equities and crude oil. Treasury yields have been up. Equities, as you probably have seen in the last 24 hours, they were quite significantly down on their record highs, especially the American equities going forward. But there is room for more upside with the equities. It seems like they've been forever soaring to fresh new highs as we go into as we go into the back end of 2020. There is still a lot of room for the equities to keep pushing higher. And crude oil, we've seen the last couple of days that it has taken a little bit of a hit. This has been attributed to the US dollar as well. So a strong dollar has kind of put the brakes on, amongst other things as well. But we've seen that oil has significantly progressed from the low that it had during the lockdown stages, which was obviously quite evident and quite obvious with the demand of oil being around the pandemic. So these are things to look out for as well as we go. So now I want to take you through, it hasn't really changed so much from last month, but I just want to take you through again the current rates of each major economy that we go through and the interest rate differentials. So as you can see here, Switzerland, the Swiss National Bank, is the most lowest interest rate. It has been for a while now, and it doesn't look like it's going to change. In fact, no interest rates at the moment look like they're going to change. Obviously, the ones in green, US, Canada, Australia, New Zealand, are the ones that have a higher rate. With the recent news last week from the Jackson Hole Symposium of the having a average 2% inflation rate, could we see the US change their interest rate anytime soon? It'll be interesting to see. It is kind of exciting times in the market at the moment with all the uncertainty going on. So if we just keep an eye on that, but we're not really expecting any major changes within the next month, especially for interest rates. But in these crazy times, you never know. It could change pretty quickly. So what I wanted to take you through now is the currency strength meter. So as you can see here at the moment, we've got a very strong Canadian dollar and Australian dollar and a very weak Japanese yen. So to put this into context, basically if the jobs report comes out and it's quite detrimental for the dollar, the US dollar, then a good position would probably be the dollar against the Japanese yen, for example, because it will be, the dollar, the yen's quite weak. Or if it's it'll be against the Australian dollar because the Australian dollar is quite strong. So these are things to look out for as well. The dollar against the euro would be quite significant, and the dollar against the pound, because they're both not doing too well at the moment. They could be doing better, like the Canadian dollar, the Kiwi, and the Australian dollar. It'd be interesting to see the Canadian dollar's performance because we have unemployment figures coming out at the same time as the NFP for Canada. So again, this will be quite good as well, quite interesting as well, sorry, to see what's going to go on with that. So yeah, basically worse than expected results from the dollar would indicate that weaker pairs would be better to trade with. So that will be I'll be looking out for that as we go when the results are released, and we'll see how that goes. Okay. So before we go on to looking at technicals and the charts at the moment, we'll just go through a few points of note that we like to go through every time. So first one, avoid trading during NFP as volatility is high, and whipsaw effect could lead to losses that exceed profits. So basically it's just telling us that when there's a huge when there's a huge market release, a fundamental market release, the markets can be very positive or very detrimental, depending on which way they're going. To try and catch a particular price at a particular moment is very, very difficult because the market is moving so quickly that even if you put in pending orders, stop losses, take profits, etc., then you can, it can miss the gap by a lot. So you have to make sure that this is known. Number two, apply protective stop loss and take profit risk management measures in order to bypass emotional hurdles. Like I just said, it can be very difficult sometimes to actually capture those stop loss and take profit marks. But even with buy stops, sell stops, limit orders as well, it is still difficult. And when your emotions get on top, then that's when things can go very wrong very quickly. So number three, close out all positions. So again, if you feel like it's going against you and you don't want to trade the news, then high volatility and range risks are there to make sure to kind of emphasize that it might not be the best trading for yourself. Hedge your positions if you can and if you want to. So like it gives the example here, trade long term and the stop loss is far from being hit anyway. So when you're hedging, it can go in your favor or it could go against you depending on the way the market has turned. Again, number five, let the markets calm down before entering a trade. This is if you want to move away from news trading. If you just want to trade intraday and you see some slight fundamental news releases coming out that might not be too detrimental to the market, then maybe it's a better time to trade a news event rather than a news event like the NFP, which is going to definitely have major volatility and major spread increases as well. Number six, analyze the data post-release. So like we're doing now, we're going through the jobs report prediction. The prediction is it's too close to call from what I've been researching for the last few hours and even for the last few days. It's been too close to call. So in this instance, it might be a good jobs report, a good NFP to trade if you don't want to trade a high volatility NFP. Saying that though, until the numbers are released, we don't know for sure what the expected figure is going to be. All we can do is have like a prediction and see if it works for us or against us. But always analyze the post data information before you go into a fundamental news release. And then lastly, pay attention to the divergence between actual and consensus figures. Like we said before, a gap of 20 to 30k is not considered much effective. So if we go back to what it's supposed to come to, so what we've got here is that the consensus and the forecast is ranged around 1400. So and the previous one was 1000, just under just over 1.7 million. So again, we've got like a 300,000 differential there, which might not be that detrimental to the market. When we've said here gaps of 20 to 30k, that's obviously less less of a figure than 200 to 300,000, but NFPs of old, of past news releases have gone into the millions. So this is when it can be very, very volatile and not a good trading experience for everyone. So this is the end of the webinar. What I'm going to do now is go through a few technicals. So what I've done, I've just come across a handful of baskets, a basket of the major pairs here now. So I've brought it down to the 15-minute chart, so it's a little bit easier to see. If I go for hourly charts, it's not really going to work in our favor very much. So 15 minutes or 30 minutes is a good indication. So if we look at the 30-minute chart, we can see, you know, we've had a bit of a strong dollar in the last few days, and as we come down, we're going to see what the potentials are. So at the moment, 15 minutes, we're going in a sideways pattern at the moment. I'll just shrink it a little bit more. So if we see what we can do here. So I mean, we've got this slight support at the moment. We're going through a bit of a zigzag sideways pattern for the last few hours. So this is an indication there's a bit of high activity, and we could see probably about these kind of ranges. We've seen this first attempt down and another attempt down. So at the moment, we've got kind of a little bit of a double top here as well. This is from, let's check. This is from late last night in the European session. So as we go into today's session, it's kind of hit a bottom top. So let's just pull that to 30 minutes because it might give us a little bit more room to maneuver. So as you can see, if it does break this kind of double top here, we're looking at levels probably about here at when we had another double top, and then a bit further higher as well. So this will be interesting if the news gets released and then we have a bang here, a bang there, and another one up here. So we'll look at that on the upside. Downside, it's trading near where I would probably put an indicator at the moment, at just over 118.44. So if we bring that down to a support of today, that's probably the lowest of today, 118.33. And again, we've seen this like false break here a few days ago, and that could bring us back down to the lower end of 118. So that will be very, very interesting, seeing as though euro dollar was recently going to jump to 120. It had a bit of resistance at 120. Obviously a lot of sell-off there, a lot of people taking profits or just closing out their positions, maybe future positions as well. So that's where you saw the market not quite test the 120, and then we had a strong dollar going into the last couple of days. So that is where I would probably be looking at the moment. Let's go to pound dollar. Again, pound dollar has been pretty weak due to the strong dollar in the last couple of days. Let's go to a 30-minute at the moment just to have a quick look. So what we can do here, we'll just zoom in a little bit more. So we can see that there's a level here at 133.20, let's say. It's currently on the downturn, finding a bit of support at 132.53, let's say. So there is some room for it to push further down. If it breaks this kind of area, we could be looking at further weakness in the pound. So yeah, that's probably another level that I'll be looking at today, depending on the news release. So let's go to the dollar yen. Again, quite a sideways pattern in the last few hours from the strength of the dollar in the last few days. So for the last day or so. So very much a sideways pattern at the moment. No point really even putting any kind of Fibonacci in there because it's just, you know, a zigzag sideways level. So it would mean that we're just basically looking to see if it's going to break some levels here. So just zoom in a little bit more. So 106.22, we've seen a bit of a spike here, 106.24, and we've got a little bit of room to go on the downside as well. So that's quite interesting as we go up to 5 minutes until the release of the NFP figures. So let's see. Just checking the data if anything's kind of bubbling up at the moment, which isn't. So the dollar CAD, as I said before, very interesting. We're going to be seeing some Canadian employment news being released at the same time as NFP. So depending on which data is better, both sets of data could be positive or negative, but it just depends which is more positive or which is more negative, which will lead us to the next level going in. So let's zoom into 15 minutes. So again, we've had a bit of a spike. Let's just check when that was. So yes, probably at the close of the European session yesterday. So, and with that, it hasn't really tested it again, and we've fallen down a bit more, and we're seeing now a bit of a resistance here as we go down into the under the 131 mark. So that would be very, very good if we can get back up above that 131 level, which is here approximately. Bang on. So we're going to see what's going to happen with that as we go into the NFP and the Canadian unemployment numbers as well. So just roughly about 3 minutes to go. We should see markets starting to move. So I'm going to bring everything down to a 15-minute chart. And then afterwards we'll take a look at some other pairs as well. I just wanted to have this basket of main currencies just to focus, not having too many pairs on the screen to confuse or to get a bit too much lost in translation as well. So yeah, so quite a big move on the pound in the last hour or so. It has actually tried to test the 130 zone. It did get above the 130. Sorry, the 133, which was at this point, and it's broken through, but then it's immediately come straight back down again. So we're just waiting now to see it's starting to move upwards again, if it can keep going. The candlesticks are getting a little bit more volatile at the moment, so we'll just wait and see what's going to happen. So 1.5 minutes to go. And actually, while we're waiting, we could take a quick look on gold. I don't like using the grid. It's a little bit more clear. So gold hovering around the 1940 area. That'll be interesting to see if we have any movement on that. There was potential on the upside throughout the morning to be tested. We did see a bit of a dip here, but it's slowly starting to recover. Early indications were that it was going to get to about 150 at this spike witnessed yesterday, but it remains to be seen. So that will be another good indication as well if we're going to reach that target as well. So let's see how we're going to excuse me, how we're going to benefit from the NFP numbers. So just another thing to add is when the US government stopped the $600 unemployment benefit, maybe it was an attempt at a fiscal policy to get people back to work. So this is another thing I forgot to mention earlier. So let's see. I'm just waiting for the data to come in now, as the markets do start to move slightly. Okay, and markets are moving. So It looks like a positive dollar at the moment. So I think I'm just lagging a little bit from the news. So the job numbers are on the way. Okay, breaking news, August payrolls data. Keeping everyone in suspense here, sorry about that. So employment rates fall to 8.4%. So that's quite a good indication. Earnings rise 0.4% month on month. So that's a very good indication of America is going in the right direction. Let me just double check my sources here. So as we can see, it's been a bit of it's done the same thing that like it has done in the previous months, especially on the dollar yen. We've seen a large spike, and now we're seeing a reversal, and the same on the euro dollar. The pound hasn't moved very much, and neither has the dollar Canadian. I'm just trying to find out what the Canadian news is as we go into the first 5 minutes of the post NFP news. So the level of support that I saw here, it's had a spike, but it hasn't actually gone all the way through. It's penetrated it a little bit, but it hasn't really gone through to the next level that I was looking at. Okay, so US August payrolls rise 1.37 million. So that's that is a reasonable figure going into the next stage of the NFP. So we've got pretty much a bit of a non-performing payroll at the moment. It's 26 pips, 27. Even if it was 30, 40 pips, it's still not really that exciting, let's say. US unemployment rate falls to 8.4%. So that is another good indication, because the estimation was 9.8%. So again, very good for the dollar, but it hasn't really reflected in the markets as yet. Let's take a quick look on gold as well. Again, so we've seen a bit of a spike on gold, but nothing to say that we're going to really test this false break that we saw here at 1,950. So we got up to the high of 1947, almost there, and then it's come back down again. So it'll be interesting to see in the next 5 or 10 minutes if that's going to have another attempt at the false break at 1950. So I'll just close that for now. So anything else moving at the moment? The pound is a bit of a disappointment, really. I wanted it to go a little bit higher to try and test the previous highs of the day that were around lunchtime in the European session, but it hasn't really. It's found some support at this target here that I put in earlier. So with this support line, I'm I'm thinking that it won't probably go any lower than that. If it does, then we're probably looking at this area of the false break that we saw roughly about and yesterday's European evening session. So that'll be interesting to see in the next 10 or 15 minutes. So we'll keep an eye on that as well. The dollar yen seems to be the main mover. It's still actually a little bit volatile, so that's something to keep an eye on at the moment. 10 pips at the moment. It went up to 20 pips. Again, not something very, very significant. So just looking at the other data now, payrolls rise 1.37 million. Yeah, we saw that before. So not something very surprising at the moment. It was going to be a tough one to call, very close to call, and it has been as well. There hasn't really been such a huge news release. So let's just see if we can get some more data here to see if there's an indication of where the markets may move in the next 15 to 20 minutes. Yeah, okay, so the figure of 1.37 million was not far off the forecast. So, I mean, we're not seeing something very surprising at the moment. Let's take a look back on the euro dollar. So we're just hitting this support line again, 118.33. If it can break past that, as I said before, we're looking at another attempt at the 118.20 or 118.21. It has fallen quite significantly if you think about where it was a couple of days ago at 120, close to 120. So we're just going to see how that unfolds. Pound again, I'll just bring that up a bit bigger. We're seeing that the support is here. It's not really breaking out of that zone at the moment. I am expecting it to push a little bit further up, maybe to test these like in a V shape, but we'll see how many of the investors think it's wise to do so. Dollar CAD, again, we've had a bit of a double break here. Looks to be false, and now it seems to be ranging back in the zone where it was before the NFP. If we can see a bit of a push upwards, a progression, I would say this is quite a good signal. 131.15. If we can get past that, then there's room to maneuver up to the high 131s. So this will be very good to keep an eye on as well. That looks like it's just started moving now. So, okay, so euro dollar. So we've gone through this line, we've gone through the 118.20. Now we're going to see if it's going to keep continuing down. So we had this false spike here. So false break here. And that was at 118.11. So that would probably be the next level that I would be looking at for it to have a bit of support should it keep pushing down. The pound has started to move a little bit. It's broken through a tad, but again, it needs to really push a little bit further down for it to be considered a full move, and we get a full-bodied candle around this area as well. So we'll see how that one goes as well. And let's take another look at gold. So again, gold, it's starting to tank a little bit now. I would say good support is probably about where it is at the moment, 1925, but we're going to just see how that's going to unfold as well. So it's kind of in a big range at the moment of $25. We've seen a $25 move time and time again on gold, especially in the last few months. So $25 by the by 4 o'clock so 1 o'clock GMT time, it won't really be too much of a surprise. So we're going to see how that unfolds as well. And what I also want to have a quick look at is the oil, the crude oil that is. So just to see where we are and what the potentials are in this scenario as well. So as I said before, we saw a bit of a drop in oil from its monthly high above 43 towards 44, actually over 44 as well, and then we've seen it drop down a few dollars, and then it started to recover today. The NFP news that has come out, this is an hourly chart, I'll put it down to 30 minutes. So again, not really, there's the strong dollar, or the strong indication that the jobs market is getting a bit better, or the US economy is getting a bit better. It's kind of affected it a little bit, but I think if there's going to be a detrimental score on the oil, it will really need to break these levels down here, probably below 41 at least, and then possibly even lower down to $40, $39. So I mean, this is the $40 range. We've seen this spike here. I don't think that it's going to reach there by the end of today's trading session, even if there is a bit of a strong dollar, or a strong sentiment on the dollar. So that's something to keep an eye on as well, because it's quite a mover. Okay, so the euro dollar, we've seen a bit of a retracement now. So it's indicated a little bit like the previous false spike that we had on yesterday's evening session. So again, we're coming back round to another break on the downside. It hasn't really managed to really go for that 118.10 area. 118 psychological would be good to put in there as well, which is roughly about there. So again, if it does break this, 118 is probably the next target. It's difficult at the moment to see it breaking there, because it just seems to be a little bit hampered by this other false break that we saw previously. So it's a little bit indecisive at the moment. The pound, let me just bring that up again. So again, we're just seeing that a little bit of a break on the downside, but a little bit like the euro dollar. If we can see, just squeeze that up a bit, if we can see more downside to break these levels that we've seen in the last 24 hours, then we could see further lows going down. So the previous lows that we had were from the end of August at below one in the lower regions of the 132 area. So this will be quite significant as well on the downside. So, but another attempt up at this area here, the 134 region. Obviously, it has to get past the stumbling block of the 133 region first. If it can do that, then there's room to maneuver up to 134 easily, like no problem at all. Especially with the new, we've got detrimental news coming out about Brexit in the last week, where the talks have been at a stalemate. So there's a lot of news coming out that can affect the market. The Canadian dollar, I'm a little bit surprised by that, because it seems to be a very big non-performer. We've seen this touch here now at the levels that I put in, at 131.15 approximately. It hasn't really pushed through it, and now it's closed a bit indecisively on that candle. So let me just zoom in a little bit. So as I say, it's touched this resistance, it's come back down, and now we're going to see if the next 5 minutes until until it's 10 to 2 GMT, if it's going to test it again. So this will be a good indication now if we're going to see either a bit more volatility or this kind of sideways pattern going into the evening session. Dollar yen seems to have benefited the most out of the pairs that have been chosen here, but still 15, 12, 13 pips, it's not really a significant move. So just seeing some more news alerts now about the NFP, about the jobs numbers, to see if it's going to really do anything for the remainder of the trading session going forward. So what I'll be looking for now for the last 15 minutes until it gets to 2 o'clock GMT is just to see if there are going to be any people selling anything off, any traders selling anything off, sorry, to see if there's potential for, you know, to put pending orders in, and if there's a need to be honest, because at the moment it's not really moving too much. It's very, very indecisive, as you can see on the pound dollar, classic example of an indecisive candle there, closing at mostly the same price it was opened at. We've had that on the dollar Canadian as well, pretty much closing after such a huge spike. And even now we see the euro dollar a bit indecisive. So let's take another look at the gold. So for me, it looks like it's going to keep probably trending in this $25 range since you know, the past 24 hours or so. It fell into the range on the 2nd of September, hasn't really managed to break out. So, but there is a lot of potential for the upside. I'll be looking at this throughout the course of the evening, just to see if it can break the 1950, and then the next level I'll be looking at is 1964, 1965, just to see if there's going to be any more chance of the market moving higher. Obviously, we have to look at the downside as well. If it does test this support that I put in earlier, 1925, this is where it seems to be supportive. 1919, 1920 would be the next support, a good indication of what's going to happen as we go into the weekend. So like I said before, Labor Day weekend, we might not see as much volatility in the market as we would do on a normal NFP going into the evening session. A lot of traders do start their weekends early, depending on what side of the continent they are in, and obviously what and if they're going to be celebrating the bank holiday weekend themselves. So let's just take another look at the oil. So that's on a 4 hour. Let's take 15 minutes. So again, not much movement on the oil. It had a bit of a detrimental effect, but it has quickly regained the loss from the NFP release. So yeah, 15 cents. Again, it's not really something that's going to affect oil too much. So, but all in all, to recap, you know, good numbers again for America. Unemployment rate falling to 8.4%. Job numbers were expected, so it wasn't really something surprising, which is always a good thing for the US job front. Not always a good thing if you're a trader looking to jump on potentials on the news release, because obviously more volatile markets could lead to more opportunities. So that's probably the only thing I would take out of this NFP at the moment. Okay, so we've come to the last 10 minutes now. And what I'll do is I'm just going to keep an eye on the euro dollar especially. I have a feeling it might start moving in the last 5 or 10 minutes. Let's put this on a 30-minute so we can see a little bit more of the chart. And let's try this on a 30 minutes as well for the pound dollar. So again, I'll just bring this a little bit more higher. So again, support at this level again, it's just broken through a tiny bit. It needs to really start pushing through a bit more if we're going to see a bit more downside. So it's just about getting there, but it remains to be seen if we're going to see continued negativity against the pound, and obviously get the dollar in a buoyant mood going into the weekend where it takes a little bit of a break. Obviously the currency pairs are still open, but the dollar markets will be closed on Monday. So let's just zoom out the dollar Canadian just to see if there's any potential. So we're seeing now that it is moving a bit more on the upside now. We could see another test at that 131.14.15 area. This will be interesting to see if we can actually achieve that. So when you're putting support and resistance levels in, it's just important to note that you check the previous charts as well, and like we've done with the market analysis, to see that what the potentials could be if it's a detrimental dollar, if it's a buoyant dollar, to see if it can reach those levels again. They're very good indications of where it could go. If you've put pending orders in, stops or limits, it could be a good indication of where you want it to start or where you think it's going to start, and then obviously protect yourself with stop losses and even take profits, because you never know where the market's going to swing, especially in these volatile periods. So okay, so like I thought, in the last 10 minutes we're seeing a little bit more of a movement now, which is a good thing. Usually the movement was on the impact news when it's released. However, it seems to be for the last few NFP sessions that we're waiting for the, let's say, the post last 10 minutes, let's say, of the news hour when it's released, for movement in the market. So this is why I wanted to hang on a bit longer. So brilliant. So the pound dollar now starting to actually break through. So now we can see that it has a lot of potential to actually, let's take this line, to keep going down further to the 132 zone. So 132, just under 131.96. I'll be looking at this for the next test. So if you do have trades open, obviously protect yourself for the stop loss, but there is a lot of room to maneuver on the way down for the pound especially. Euro dollar kind of going in the same direction, not as forcefully, but it is actually slowly pushing further down. As we've put in here, the next resistance at 118.10, that'll be interesting to see. And the dollar yen is moving a little bit higher as well. So we didn't put many levels in there, but the first level I would put in is there. As you can see, the previous high when it started collapsing yesterday, and then now that it's broken there slightly, I would be looking probably around the fresh high area, 106.47 to 106.50, around this area. Canadian, still kind of waiting for it to move a bit more. So the last 5 minutes, of the NFP outlook. And as I say, if you're going to be looking at these charts for the remainder of the day, or even just glancing at them every now and again, just kind of take note at the 118 area for the euro dollar, and probably the 132 area for the pound dollar. So these are very good indications that it's probably going to head that way. As we've seen, we saw an indecisive candle for the euro dollar and the pound dollar, but now it's kind of flourishing, and it knows what way it wants to go. And here we go. So 118.10. So it's hit that resistance now. So it's support line now, and now I'm fully expecting it to drop to 118. So that's the next good indication. So let's take a look on gold quickly to see if there's any movement. So gold is moving downwards. So it's at 1927 now. 1925 is where we thought it was probably going to go, roughly around that area, 1925. And if it does break, then we're looking at the low 1920s. So 1919, 12120 would be a good indication as well. And as we look for the oil, and we're seeing, with the strength in the dollar, we're seeing oil move down further as well. So since the NFP release, we're seeing a bit more, 25 cents. So it's $42 it's moving towards. So now that we've gone through $42, if it can keep pushing there, then I don't see any reason why it can't keep going down to these levels that we've seen recently. So I'll be looking now at 41.58, or maybe a bit higher at 41.64, something like that. So very good indication that it can easily push further downwards here. So last few minutes then, and yeah, so like I said before, if you're going to look at these charts for the rest of the day, then euro dollar, pound dollar will be very, very interesting. Dollar yen as well. We're expecting the levels that have been produced at the moment, 118.06 at the moment. No reason why it can't get any lower. So let's see the potentials past 118 when it drops, because I think it's going to drop any moment soon. So let's go on to the 4 hour. So as you can see, 118 there. Easily, if it can break these false breaks that it's had recently, that's quite a good level on the support line, 117.71, 72, or even 117.87. So that would be a good indication as well. Okay, so I'm just about to sign off. Thank you very much for joining me, and I hope the insight has been educational. And if you have any questions, feel free to add them to the post, and I'll get back to you as soon as possible. And have a great weekend ahead. For those of you that are celebrating the bank holiday, have a good long weekend. And for those that are not, then we will be back on Monday. Thank you very much once again, and goodbye for now.